So we got a new report via Bloomberg this afternoon, according to Citigroup, one of the world's very biggest investment banks, saying that for those who are hoping that the OPEC deal will be extended from March 2018 till the end of next year, maybe in for disappointment. And that comes, see how the crude oil market is speaking as we speak. Brent crude futures at about $63.66 per barrel in early trade today. That's about 0.3% higher from the last close. The US WTI at $56.92, and that's since moving a little bit further in the green. Traders are looking at a rally that pushed up Brent crude by over 40% since July may have run its due course. But a big story is the November 30th OPEC meeting in Vienna. It's the final meeting in 2017, unless anything else happened between then and the end of the year. Let's get this conversation going and see how all this put together and put Nigeria at the center of it. We talked to Pamela Bassiduke, who is one of the research analysts and a member of the team at Financial Derivatives. Pamela, it's good to see you on the program. Good afternoon.
Thank you for having me.
Yeah, if you are going to be part of the meeting of the OPEC in Vienna at the end of this month, what would you be looking for?
Yeah, definitely. So there's a general consensus or expectation that OPEC will extend its production cut till 2018. But I'll see OPEC stick to its initial expectation of production cut to March 2018, because there's been a high level of compliance with him among his members. And then if you look at it, they will take into consideration that at a high, as oil prices get high, it creates an incentive for more U.S. shale production. And if that happens, we're going to have a bountiful supply in the market, and that's going to crash down prices. So speculations till the end of 2018 would be quite dicey, as probably to increase oil prices in the short run, but definitely the long run would see that prices will crash down due to more production of U.S. shale. So I would rather see that leave production till the 2018 quarter, and then watch out for how much incentives U.S. shale production U.S. can produce its shale.
Pamela, in other words, you are hoping that the November 30 meeting could disappoint those who are thinking, already having a party, having a nice time, that the cutback will be extended beyond first quarter next year until December next year.
Yes, definitely. I mean, because if let's look at the long term. Short term, it's better for us to look at the long term. Yes, we're going to have, if there's an increase in production, we're going to definitely have an increase in oil prices in the short term. But going forward to the end of 2018, we're going to see an increase in shale production. At the moment now, as at earlier today, there were news that the U.S. increased its shale production and the highest in 3 decades. So if there's an extension to the end of 2018, we're going to see further increase, which will definitely increase supply and would definitely lead to a fall in oil prices, which would not be so good for Nigeria.
Yes, for Nigeria, and that's where we're bringing it home. We love these prices above $60 a barrel, and the government is a little bit conservative at 45 as part of the assumption for 2018 fiscal year, and of course a lot so ambitious about 2.3 million barrels. That includes, of course, the condensate. So it looks all good on paper, but how much prepared do you think Nigeria should be for a likely shock, as you analysts will put it?
Yeah, definitely. I mean, the oil market is quite volatile, so any slight news could either increase prices or bring down prices. But at the moment, we're at a safe average price of budget price of $45 per barrel. I mean, if prices continue to stay within and above this range, the range of above $60, which should be good for Nigeria. I mean, it will lead to increase in our budget revenue, definitely. And then as that increases, we're going to see a fall in deficit. And when there's a fall in deficit, it leads to decreased borrowing, which ultimately reduces interest rates and then makes funds available for the private sector to borrow. And then also you see if there's if oil prices remain around that $60 per barrel, with the headroom, with the around $19 per barrel for oil, would also see that there will be some form of supplementary budget in place. But what this means is that the government can take up more capital projects, and when this happens, it means that we'll see more activities occurring in the economy. And also, if you look at an increase in forex, an increase in oil prices also leads to an increase in forex revenue, which would also help in increasing external reserves and also help us, the CBN, to continue its steady intervention.
Well, Pamela, some of the estimates we've seen today from some of the international banks is looking at 2018 price range of about a little bit less than $60 a barrel. Do you think that's a safe assumption, even though we're having a Christmas party as far as the oil prices are concerned, even though we're in November?
Yes, that's relatively safe because, like I said earlier, oil prices are quite volatile. We could have any form of shock. There could be an increase in U.S. shale production, or there could be some form of disruption somewhere. So yes, it's safe to say to leave oil prices around that $50, but then hopefully it will be on the highs, the 50 highs.
So your estimates at financial derivatives, how much are you looking at for 2018? Give us a figure.
So it's around $57 to $60 per barrel. Let's just play safe.
You're talking about $70 a barrel? I love your optimism. I can take your optimism to the oil market. I can trade $70. $70 is going to be a party all over the world. Except those who are in the shale business, they're not going to like that on the U.S. coast. I'm not sure they like that. Pamela, thank you very much for your time today, and do have a great day downtown Lagos from Financial Derivatives Company. The data from Egypt's Statistics Office shows the country's annual urban consumer price inflation eased slightly to 30.8% in October from 31.6% in the previous month. Inflation soared to a record high in July on the back of fuel and energy subsidy cuts by the government. Import-dependent Egypt abandoned its currency peg to the US dollar last November, and the currency has depreciated through by nearly half since then. That's about all for today's Business Incorporated. I am Bosi Nomova. I hope you enjoyed the show. Do have a great day, everyone. And this is Channels Television, Nigeria's news leader. Bye for now.